So Nvidia reported earnings yesterday, and unfortunately it wasn't the best earnings ever. I do want to say it's probably been one of the worst earnings I've seen in a long time. But even though earnings were bad, I'm still super bullish in this company in the long term of things. And on today's episode, I want to take a closer look at 3 reasons to be bullish for Nvidia after the recent earnings. Before we get started, if you want to hear my full thoughts on earnings, feel free to watch my previous video. I live streamed the whole earnings call and shared my overall thoughts.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So we can see as I am recording this episode, Nvidia pre-market is down roughly 3%. And even though this isn't one of the bullish points out of the 3, I do want to say earnings were bad. Guidance was horrible, and for the stock to be only down 3%, I think that tells me that, hey, a lot of this negativity was priced in for the stock. So the first bullish point is the data center market. And you might be like, Jose, why the data center market? We can see quarter over quarter, it only grew 1%. Obviously, year over year, it did see a 61% growth, but that quarter over quarter growth shows that, hey, maybe this might not be the growth beast that many people were thinking about. So they did mention that the main reason for this market to increase dramatically was sales in North America hyperscale and cloud computing customers increased. But unfortunately, they were offset by lower sales in China, and they also had supply chain issues. So I do want to say most of the problems that Nvidia has right now, I do believe is short-term issues. And when I mean short-term, I don't mean a couple of months. It can definitely last a few quarters. But in the kind of long-term mentality of this, I do believe Nvidia will continue to do well. Let's kind of talk about that slowdown in the Chinese market. They do mention due to kind of economic issues in China right now, they did see a huge kind of slowdown in this space. But they also mentioned that they don't believe it's going to last long because cloud service providers, they need to continue to upgrade their technology. For example, can you imagine here in the United States if, let's say, Google and Amazon both stop investing in kind of cloud service providing solutions? They're only going to do that for a limited amount of time because technology continues to innovate. In that scenario where I gave, imagine if Amazon stopped, but then Google continues. Obviously, Google is going to be able to provide better solutions than Amazon. So by investing in new emerging technologies, is going to allow it to become the leader in the cloud server providing market. So companies, especially ones with heavy competitions in that space, can't really afford to halt investments. If you are enjoying the episode, make sure to hit the thumbs up as it helps me grow my overall audience. And if you wish to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Another kind of bullish point for the data center market is in quarter 4, we're going to start seeing true kind of revenue come from their Hopper architecture graphics cards. So overall, I do believe this is a market that's going to continue to grow, even though many might be fearful in the short term of things. Finally, they mentioned that supply constraints were one of the major reasons they didn't see huge growth sequentially. The reason being is these kind of data centers and supercomputers, you need to have kind of all the components at once to really go running. And unfortunately right now, there might be some items that are taking a lot longer. So customers are just waiting for all of that to kind of be available to them to finalize the orders. So again, I do believe all of these are going to be short-term pains. I do believe eventually China is going to start investing back again into kind of their cloud servers providing solutions. I do believe the supply constraints are also going to fix themselves up in the future. And finally, I do believe Hopper is going to provide strong revenue growth for this company as all these clouding companies improve their clouding solutions with new technology. The second bullish point I want to say is the gaming revenue. And you might be like, Jose, how is that a bullish point when gaming revenue was down 33% year over year and 44% sequentially? And again, this is one where I believe is going to see a nice amount of short-term pain. And again, this could be numerous quarters because 1, the overall kind of crypto market slowdown is happening right now. 2, the consumer market is seeing a slowdown right now, which is also affecting people purchasing either new laptops or new graphics cards. And 3, the next generation of graphics cards is coming out within the next few months, so people are waiting off. So I want to say it's the perfect tri-storm happening at the moment that's really affecting this revenue segment. On the bright side of things, next month in September, they are going to do their GTC conference and they are going to announce the new generation of graphics cards. If the generation and performance leap of this 4000 generation versus the 3000 generation is huge, I do believe that overall technological improvement is going to be the reason for the gaming market to continue to be strong. I don't believe it's going to be as high as we've seen it before, like for example Q1 fiscal year of 2023, which was about 3.6 billion, because I do believe they had that huge push from crypto. But I do believe we are seeing a bigger need of laptops with kind of high graphics computing. For example, for content creators like myself, YouTubers, Twitch streamers who stream games, gamers in general. We also have kind of the professional workforce where now a laptop is more important due to the hyper work style. So even though I don't believe this kind of gaming market will get to those all-time highs anytime soon that we've seen it in the past, I do believe this is one that's still going to continue to contribute strongly for the company. The third and final thing is the automotive market. The automotive market is still a small portion of this company's total revenue, 220 million, but it is one that I believe will continue to grow dramatically, and management believes that as well. For example, the automotive market was up 45% from a year ago and 59% sequentially. During the earnings call, they mentioned the automotive is becoming a tech industry and is on track to be their next billion-dollar business. If we take a closer look at trailing 12 months, it's right now an annual revenue of, I want to say, $700 million in revenue. I do believe in the upcoming quarters that's going to change. In the trailing 12 months eventually it will be more than a 1 billion run rate. They do mention that the automotive is at an inflection point right now, and I do believe people are going to be surprised of how quickly this grows in the upcoming quarters and in the upcoming year. Again, I don't expect this to double next quarter or the quarter after that, but I do believe it's going to be making sequential improvements from here on out. So I hope you guys enjoyed today's episode. Like I mentioned, their earnings was not the best. It's probably one of the worst I've seen in quite a while. But again, I do believe this kind of pain is short-term lived. In the upcoming few hours, I am going to release 3 bearish points that I saw from their earnings. Again, I just want to show both cases for this company. So take care, have a good day, and see you next time.